What's going on, folks? This is Golden City with you, just looking at the price of Cardano. Cardano is one of my favorite projects because it seems that they've managed to bring a community of researchers, of cryptographers, of programmers, software engineers, and Cardano enthusiasts and crypto enthusiasts in general to create this amazing project that creates a standard that I believe no other crypto project has. But anyway, I'm also curious about price. So I've been tracking the price for quite some time. And as you can see, we're at a point this past Monday was the Bitcoin halving. And Monday was also the beginning of the Shelley Haskell Friends and Family testnet, where nodes on the network would go live, running the Shelley code, right? So that's a big deal, and I'm curious to how that would have impacted the price. So on May 11th, I can't see it yet. May 11th, right here, the price went was in flux, but by today the price shot up. Yesterday the price shot up, and today the price shot up. So I'm curious to know where the price will go next. So I currently have a Fibonacci. We'll start looking at that setup. Let me turn off some of these other. Actually, no, just keep these there. Have a Fibonacci set up from its lowest point at 2.1 cents and its highest point at 5.4 cents, right? And so within this gray channel that's between the 0.718 and the 1.0 range, we've been playing in this area, right? And if you notice, back in, let's see if I could get closer, back in around March 6th, March 7th, that area, we had a support setup, resistance setup, and we can't seem to break that resistance, right? So we've been stuck at this particular price point at about 5.1 cents since then. So I'm curious to know if it's going to break up or break down. If we look at the Bollinger Bands, you can see that we hit the upper band for some time, and the bands are tightening. And for me, the tightening of Bollinger Bands typically denote a major move that's about to happen. We're on top of the middle band, which suggests to me that there could be room for the price to shoot up. Of course, I don't know. It's just speculation. But if the price shoots up, that means we might get to the 1.0 mark on the Fibonacci sequence, which is at about 5.4 cents, right? If we break past that, we have the potential to go as high as 7.4 cents. Now, if we sort of go back at an earlier time and look, the last time we reached a high in that range was 6.1 cents back around February, right? So that would possibly be a point of resistance. Let me actually draw a trend line there. Okay. I'll put it at about right here. All right, so right here, this area might potentially be a point of resistance. And with that considered, I think it might be interesting to see, what happens if we shoot up. We might shoot up that high. We might shoot up to this gray area, the top of the 1.0, and, face some resistance there. We might shoot up as high as we've gone before, which was about 7.1 cents, which would be amazing, right? If we drop, I tell you right now, get ready to buy. Now the chances of it's going down, as I see the Bollinger Bands close, sometimes that suggests that, the price can actually drop as well. And if that were to happen, maybe not do that. If the price were to drop, I see us going down to a level of about 4.1 cents, which is the in my case, 100-day moving average. If we now look at these, the gold and green line, the gold line is the 200-day moving average, and the green line is the 50-day moving average. We can see that the green line, 50-day moving average, is about to cross over the gold line, the 200-day moving average, in about, give or take, a week, May 19th, right? So once we have that cross, typically it's the case that when you have a golden cross, the price shoots up. But we've seen in the past that the opposite often happens, right? For instance, here we had a death cross where the 50-day crossed below the 200-day. And what happened? Several days later, the price shot up. If we go further back and we look at the last golden cross, we had a golden cross here. Price did shoot up, but it immediately dropped afterwards, right? So sometimes the golden crosses can be a little bit unpredictable, right? But I'm anticipating that there'll be some heavy price action around that time. Now, the other resistances we have, before we hit the 200-day moving average, we do have resistance here at the 0.718 Fibonacci, and we have resistance right below that within the blue area between the 0.6 and the 0.7 at about 4.5 cents. If we drop any lower than that, like I said, we'd hit the 200-day, but if we go below that, we can also run into the 50-day moving average at 3.9 cents. And there's a lot to look at. The other thing to take into account is the general pattern, the downwards pattern that you can see in the charts, right? So I'm just going to draw one more line, make it real thick. If we just look from up here, let me get the top of that, if I can, all the way down here. We have a general downwards pattern, right? So that's important to take into account as well, right? Because if this is resistance, then that means there's the potential for the price to go down. There's several patterns here at play. I'm not sure which one to pay most attention to at the moment, but let's say I look at this one. You can see that this area has served as support at one point. When the price dropped below, this area served as resistance, and when the price jumped over, it was mild support before it shot up. So if we see any drop down, I wouldn't be surprised if it came down to this level at about 3.0 cents, right? Before it bounces back up. And, does a little bounce and drop thing. So I'm open to anticipating that, right? So I think it's worth being prepared for that. The other pattern that we might want to observe is if we look at the price from down here, there's also the potential. Sorry, I know my chart's looking crazy. There's also the potential for the price to bounce down to this area, which again coincides with the golden cross, this area, to keep in trend with the bottom trend line going up. So I anticipate we might see a drop down to about 4.1 points, give or take 4.1, maybe even 4.2. And if that happens, hey, that'll be a great opportunity to shore up your bags before we have another run up, right? So might even spike down a little below that and then pop up. But anyway, that's just a little bit of analysis. I hope you find it interesting. I know this is really convoluted, but next time I'll give you a more clear chart. Have a good one.